All right, good everybody. We are live in the financial markets today. Um, we will be recording the sessions here so that you can see what we're doing. Uh, and we will send out videos on the trades that we take. So let me go here. And you're going to find out we got my guy, Mr. Ronald Jones the third.
Recording in progress.
In the building. All right. So the first thing we're going to do today, Ronald, is this, right? I want you to get your notepad out. For us, we always need to know what the daily is doing first. So we're going to pull up a daily chart, right? Give me 1 second and I'll pull up that daily for you so we can take a look. And the reason why you want to know is you want to know what kind of market you're in, right? So I'm going to be going back and forth with mine. I'm going to be going back and forth to show you here. And we don't trade live until 1:36, simply because we want to give the market a chance to kind of do what it's going to do. It's not here. Hold on a second.
Good morning, Dr. Jones.
Hey, yes, sir. What's going on?
Just a little news here for the day at 10 a.m. We got new home sales, orange folder.
New home sales, orange folk. Okay. Good stuff. So what we want to do is we want to detach this chart and change the bar periods to daily. All right, so this is the daily chart, right? So if you're looking at this daily chart, you notice that today we have a lower low and a lower high, because this bar here, right? This bar right here, the high of this bar is lower than the high of this bar. Okay. Right? And the low of this bar is lower than this bar. So we would anticipate potentially that this thing is going to continue down. There's no guarantee that that's going to happen, but that's what the anticipation is. Okay. And as we're looking, you know what I mean? So now we know that if we get a setup where we're looking to make money to the downside, there's a high probability of that being the case. All right. So that being said, now we know that. Now we can go to our regular trading. We got a lower low and a lower high. And what we want to do is you remember me drawing those horizontal lines before. What we want to do is we don't even have to do that. What we need to do is just basically copy and move our drawing here. So, and then what we want to do is so we know what the price is. So if it gets above that 1604.350, we know that the market's going to turn up. All right. And then if it gets below right here, right? That area. Then we know for a fact. So we got 15,931.75 and 16,043.50. So we know that. So now we can move that out of the way. Now we can just get to the trading and then look for our opportunities. Quinn will be live with us here today. And since Quentin is live, they basically don't have anything. Now, so what I want you to understand in your journal, I want you to write this down. What you're going to need to know is what markets you're trading, right? You want to know what the volume is on average per day of that particular market, right? You want to know what kind of setup you're looking for. And I'll tell you now, 75% of our trade. Okay, go ahead.
You said the value of the market? No,
No, the volume.
the volume.
Yeah, no, the volume of the markets. Of the market you're trading. We don't have anything right now, Quentin, because that's a counter trend trade with no divergence. So we're going to just chill out for a minute and wait for a trend within trend setup, or wait for the 4 reasons to take a trade. So you need to know the volume, right? But you also need to know if you're like on a daily chart, whether or not you have a higher high and a higher low, or a lower low and a lower high. You need to know what the daily says on the chart. So you can write that down. You know what the daily is, whether or not you're dealing with a higher high, higher low, lower low, lower high. Okay. You need to know that.
I want to clarify the chart. Look at today. Are we doing the 2700, 900, 300, and the 150?
Yeah,
Volume chart?
correct.
And we're in the trade on the smallest time frame?
Yeah, on the 150, correct.
Okay.
And you said we had 10 o'clock home sales?
Yes, 10 o'clock home sales, orange folder.
All right. So,
I know what the data is doing first. That was the first thing I had wrote down.
Yeah.
What the data is doing.
yeah,
Know what markets you're trading. Know the value
right.
of the market.
Know the volume, what kind of volume you have on the market. The reason why that's important is so that you understand the volatility that market can have, right? Because if you don't know the volatility, what you can do is you can get into a market that's too slow for your liking, or you can get into a market that's too fast. So you need to be able to get into a market that fits your personality. That makes sense. The next thing is, what we want to do is we want to have a target goal. Like our goal for today is you're just training, but you'll have the millionaire plan that I'm going to show you later, and show you what your goals need to be in order to meet that particular thing. So you need to know what your goals are. But also something very, very important is you need to know what the news is so that you understand. And I'm talking kind of fast, so I'll slow down.
Oh no, it's okay.
You need to know what news is out for today, right? Quinn just told us that we have existing home sales at 10 o'clock. You say, Quinn?
Yes, sir. New home sales.
So you got new home sales at 10 o'clock. So what we don't want to do is we don't want to trade around news. We want to give ourselves, my rule is to give myself 5 minutes before or 5 minutes after, meaning that I'll trade up to 9:55 if I have a setup, and I won't trade to 10:05 after the news is coming out. Right? That's to avoid any spikes that might happen in the market. So we'll wait. And the other things that you need to know is, okay, what's your goal, right? You need to understand what's your risk tolerance. What the risk is per trade. You got to know what the risk is per trade. Kind of like what we was talking about PTJ, right? One of the things he talked about is you got to know what your risk is.
Yeah.
Right? So that way you don't put yourself in a bad situation. The most powerful trade you can take, the way we trade, is a trend within a trend trade. That's it. That's the most powerful trade known to man.
A trend within a trend.
A trend within a trend, right? That trend within a trend trade has a high probability and it allows you to be getting the trade with some confidence.
Yeah.
Right. And there are basically 4 reasons to take a trade. Right. From my rules. Right. The 4 reasons to take a trade are a higher low, a lower high, the divergent higher high, or divergent lower low. Now, I'll explain to you what those are after we finish right now.
Higher low, lower high,
Right. Divergent,
divergent, higher high.
divergent higher high, or a divergent lower low.
And those, you said these are the 4.
Those 4 reasons to take a trade. All right. Now, once you know the 4 reasons to take a trade, the next thing you know is the sequence upon which the trade happens. The sequence upon which the trade happens is simple. It's momentum, trend, time. Right? That's the
And that was the different, because that's how you was explaining these, right?
right. That's how I was explaining the charts. Right.
Yeah.
Exactly how I was explaining the charts. Right. You got momentum, trend, and time. Right.
And you said these are the sequences of
How you get into a trade. One of the things that you're going to have to do that's mandatory is you're going to have to know what you're trying to make of the day, right? And when I say you're going to know what you're trying to make, you have to have a goal, right? You can't just come in here and say, I want to make as much money as I can, or I don't know how much. You got to have a goal that you're trying to reach. Now, you might say, okay, cool, the day's going really good, so I'm going to take some extra opportunities. Or you might say the day's not going so good, so I'm going to stop, fall back, because the thing is, there's nobody on the face of the planet that wakes up and they're happy, every day. Like they just feel like everything's going to go great. There's nobody on the face of the planet that wakes up and feel like the world coming to an end every day. You have to be able to monitor and manage your own emotions and understand that you should only trade when you're like this. Right? If you're too up, you don't need to be too high, you don't need to be too low. You need to just stay even so that you can have a level head when you make these decisions, because this is not play money on the line, right?
Yeah.
You got to be able to understand why you're doing what you're doing. Like right now, we're not trading. The reason why we're not trading is because this thing is essentially what Quentin like to call it. What you call it, Quentin?
Consolidating.
Yeah, it's consolidating. Basically, so write this down. Consolidation is when the market is neither making high highs and it's not making lower lows. It's basically in a range, right? It's not moving up or down, it's moving sideways. Those kinds of things are extremely important to understand so that you don't take unnecessary losses. I'll say this so that Quentin also know, because he says this all the time. The only time we lose is when the market is what, Quentin?
But it's divergent.
So
counter trend, I'm sorry.
So yeah, you only going when you're counter trend and when the market's consolidating is the only time that you're gonna really have a problem in the markets. As long as you're trading with the trend or trading in the trend, more than likely you'll be fine. There is nobody on the face of the planet that wins on every trade. And there are several reasons for losing. So write this down. You lose because you're not focused on what you're doing, meaning that you're too high or you're too low, right? You lose because the market's in consolidation. You lose because you're going kind of trend to the market without really understanding that it's not a turning point.
Hold on, say that last one again.
You lose because you go counter trend to the market without realizing that it's not at a turning point. Right? And you lose because you get into a situation where you're antsy. Either you're too fearful or you're being too greedy. Right? We're not in here. We're not in here for entertainment. We're not in here for ego. We're not in here to prove anything to anybody.
Yeah.
We're in here, you trade simply so that you can extract money from the markets, right? And as long as you understand that path and that parallel, then everything else takes care of itself.
The four reasons why we lose money.
Yeah. And all you do is, I like to say, you just wait. A lot of this is waiting, right? A lot of what we got. Go ahead.
Can you push your 150 chart? Looks like the moving averages are turning down.
Yeah, you have. So let's talk about divergence, right? Divergence is when you have an indicator on your chart that's not doing the same thing as price, right? I give you a prime example right now. Prime example in this right now.
You said an indicator.
The indicator is not doing the same thing as price. I'm going to show it to you. I'm going to give you an example of that, right? An example of that is this right here. You see the indicator, then you get lower, but price here went lower. You see that?
Yeah.
So that being said, right, there's a strong possibility that price is done moving in the direction that it's going in a lot of cases. So we just, and this is the divergent lower low that I talk about. When I talk about it, you can trade from a divergent lower low. If it wasn't for the fact that news is about to come out, we'd be looking for a trade to go to the upside, right? And ladies and gentlemen, I didn't say, but we are trading what we call the NASDAQ futures markets. That's what we trade on a regular basis. So that's what we're sitting, just waiting on our opportunities. There hasn't been an opportunity for us as of yet. So we're sitting and we're waiting on that to happen. In addition to that, man, I mean, if you wait on everything that you want to see, you have a high probability of making money. The hardest thing in this business to do is to be patient and then be aggressive. See, here's the secret to making a lot of money in the market. When you're wrong, you're scaling back. But when you're right, you can't be right enough. Like you can't have enough contracts or enough shares if you're right. If you say, I think the market is going up, and you put on 5 shares, buy 5 shares, and then market pulls back and it continues to go up. You put on another 5 shares. Market's still going up, pulls back a little bit, and you see it's still going up. Another 5 shares. Market's pulling back and it's still going up. Put on another 5 shares. So now you got a total of 20 shares, right? And the market's continuing to go up. Well, the market goes up, goes up, goes up, goes up, and you put on 5 shares at a pop. And you keep doing that until it stops going up. And by the time it stops going up, you got 100 shares.
But you ain't just but you kind of just scaled. You didn't just start off with.
Yeah, you start out with 100.
Mm-hmm.
You start out with 5, and you just kept adding that. Remember when I told you the divergent lower low?
Yeah.
What direction I told you it was going?
Down. Up.
When I told you that price was here, I said typically when price goes down, when you have divergent lower low right here, and if a lot of times then price goes up.
Oh, okay, I got you. Yeah.
And it went up in this case, right? So now we just sit here and we wait on our opportunity to see if it's going to give it to us. But it's still a consolidation, right? Because right now we still have price. It has not gotten above that line, and it hadn't gotten below this line. So as long as those lines are contained, then there's really not a reason to try to get into the markets, in my opinion. Because if you do, you're trading in what? You're trading in consolidation, right? So here we want to extend the drawing. And we just sit and wait, right? We just sit and wait.
But you said you wouldn't do anything until at least 5 minutes after the news anyway, right?
Right. I'm not doing anything until 5 minutes after the news. So now we just sit back and we just chill, right? Now.
Okay, so that bottom line, so the bottom line you told me that's the price?
Where?
Or you said divergence is when the indicator is not doing the same thing as
right. So you see how the indicator was higher here? Like this point, the exact same 2 points.
Yeah.
So let me do this so you can see what I'm talking about specifically. Draw a vertical line. You see these 2 points?
Mm-hmm.
But price, right,
Mm-hmm.
is higher here. So that's the low point right there.
Yeah.
And then price is lower there.
Mm-hmm.
But the indicator here is higher.
Mm-hmm.
Right? So that being said, now all we do is we literally just sit here and wait for the market to do what we anticipated doing.
Mm-hmm.
And that's it. So what I want you to do now is I want you to ask me as many questions as you can so that so to help you kind of solidify your understanding of what we talked about so far.
Okay. You know what the daily is doing first.
Right.
Well, you got higher highs, lower lows.
Correct.
So you know what markets you're trading. And what did you say the name of this is again?
It's called it's the NASDAQ. It's the
NASDAQ.
It's NASDAQ, like the NASDAQ futures. It's the NASDAQ. It's really the technology sector of the stock market,
Mm-hmm.
right? It's the technology sector of the stock market. So in general, that's what that is. In a broad sense.
Like NASDAQ.
NASDAQ.
AQ. Okay. Technology sector of
Right.
the stock market. Okay. Yeah, so the first thing you did, I guess it was like you was kind of trying to see if whether or not it was in consolidation.
Right. The first thing I did was to look and see where the market was, right? If I expand this chart, right? I can see, like when you look at this chart now, you can see the market is really not going anywhere. You see what I'm talking about? The market is really not going anywhere here. So because it's not going anywhere, we don't want to be a part of the situation, and it's just basically moving. Now you see it's getting out of that range. You see that now? It's getting out of the range. So now we want to bring everything back together here and see if the market now continues to go up, or if
So, right, this right here. See where they just went above that line?
right.
So what would,
So now,
that's out of consolidation, right?
right now is out of consolidation. Correct, Mundo, right? See, it's 10 o'clock. You see how the market's starting to move fast?
Yeah, yeah.
Because there's news coming out. And this is what I'm talking about. You want to be aware of that, right? You want to be aware of news so that you don't get caught in a situation, right?
So never make any moves when the news first comes out.
I wouldn't, right? No. So the answer to that question is no, in the sense of how we trade, right? So, so that's why I tell you to wait 5 minutes before, right? 5 minutes before and 5 minutes after, right? You might miss a trade, but it's okay to miss it because there's only one trade in 4 or 5 that you'll get in the day, right? Now, this trade did work, but it happened right at news.
Yeah.
Right? So it gave you an entry of 1475 with a stop of 8. And then it came down, and this is what I'm talking about. You see how fast this thing is moving?
Yeah.
That's why I tell you want to wait.
Does it typically come out at the same time every day? Or?
No. You have news all throughout the day on different days. Depends on what it is. You know, I could literally go through a whole slew of news items. You got core CPI, you got new jobs numbers, you got new home sales, you got the FOMC minutes, you got the FOMC meeting, you got. I mean, there are hundreds of news items that can come out during a given week, and you just have to be aware of what's important and what's not. Right? We won't go through that right now, but there are what they call the yellow folders, orange folders, and red folders. Yellow folders are what you call basically something that really isn't important. Orange folders is something that can be considered important, and red folders are what is considered ultra important and will move the market. As a matter of fact, Quentin, let me ask you this while we got you. Was the home sales news, was that a yellow, orange, or red folder?
That was an orange folder. So new home sales was an orange folder.
Okay.
And by the way, Ron, we get that information from 4X Factory, which is a very quick and easy way to identify without getting complicated or any details.
Okay, 4X Factory.
Right. forexfactory.com is where we go to see what the news is.
In fact, just to let you know, there's nothing else after that for the rest of the day.
Okay.
For the U.S., everything else is in Great Britain, let's see, and other countries. So we can just let some break down.
Okay. All right. Cool.
You know, the volume of the market you're trading. So you were saying like, kind of know the pace of the market. I guess you saying like make sure the pace works well with you.
Right. So let me tell you something. Right. The audience can't see my screen and see me at the same time. I am recording this, so they'll see it later. But you see those numbers I have there, 2,700, 900 at the top right here. I'll push it again. Give me a second.
Okay. Yeah.
You see them right 900 here, 300. That number is based on the average volume of the market,
Mhm.
right? Over a 30-day period of time, based on the time frame differential that I use, which I can't get into that because that's very detailed, but I use a certain time frame. I use time charts to see where the big money might be moving. I use volume charts to trade. Okay. And that's how I accomplish what we're trying to accomplish. Like today was a very good educational day.
Mhm.
Today is going to be a very good educational day because I'm going to give you a slew of information in a very condensed amount of time to allow you to make informed decisions almost immediately.
Mhm.
Right? So our setup is to again look for momentum, trend, and timing. And we don't do anything before or after that thing is actually happening.
And those are our sequences of getting into a trade.
Trade, right? That's the sequence to get into a trade.
What the news is, I don't for that. Okay, we went over there because I was on, like y'all told me, the website. Know the risk per trade. Makes it the most powerful trade is a trend within a trend. Could you elaborate on that a little bit more?
Yeah. So a trend within a trend, basically explain it to show you. The trend technically on this chart here is up. We identified a trend based on our moving averages that we have here. Right? Now, when the moving averages on this chart align with the moving averages on this chart, right?
Yes.
That's a trend within a trend. So both charts, even though they're two different time frames, are saying the exact same thing. And this chart here is the one that gives us the pause, meaning that, remember when I told you the market is going up and then it'll pause?
Yeah.
That's when we get in. We get in when the market is going in a direction and then it pauses for a second and we anticipate that it's going to continue in that same direction.
Okay.
Does that make sense?
Yeah.
All right, cool.
Hey, Dr. Jones, I just had someone say, that they can't see you, they can hear, but they can't see your screen.
Okay.
Your chart.
They can't see. Okay, so I'll explain to everybody. You won't be able to see me and the charts, but what I am doing is I'm recording the session so that the charts will show a little bit later on today. Because I can't show both of them at the exact same time. I am YouTube Live so that you can see the dialogue and everything that we go through from a teaching and a showing standpoint, and then you'll see what's on the screen at a later time. Okay.
Yeah.
So I just want everybody to know that because I basically have to be turning the camera to show you the television and turning to show me and all that at the same time. So we're looking for an opportunity. We just haven't had one yet. However, one might be coming up, Quentin.
Yeah, I'm seeing it. Are we focusing on a micro or a mini?
The micro for right now. So we have our momentum and our trend. We have our trend over here. Our overall trend is up right here.
Yeah.
So since our overall trend is up, now we're looking for a pause in the market. All right. And we'll go 2 contracts on that mini, on the micro, excuse me. And we're waiting for, ladies and gentlemen, we may have an opportunity coming up here soon. We're just watching to see if this thing actually triggers. And it hasn't triggered yet.
I got 2 in the chamber.
All right.
Your call or the arrow.
All right. All right, on green arrow, 2.
Gotcha. in at 34.
All right. Woo! Out.
Out 23 points.
23 points. Cool. Simple as that. Ladies and gentlemen, we just took a trade live, made 23 points, which is equivalent to 23 times 20 would be $460 on the mini. We're doing the micro as a test today to make sure that everything is working correctly. But you can see you saw it just happen, right?
Mm-hmm.
So this is what we do every day. And if you wait on everything you want to see, it turns out just like that. Majority of the time. I'm not saying you'll win every time. I'm just saying majority of the time you put the trend in your favor when you do that, right?
Mm-hmm.
And the system actually told you. It was the system that told you to get into the trade, which it told you to get into the trade here. And I told Quinn to go ahead and get out of the trade.
Yeah.
Right there, when the system told you to get out.
Yeah. Okay.
Right.
Yeah, quick.
That happened real quick, right? So, ladies and gentlemen,
Almost close to what the system did. You almost called it. You look at the star, you almost did it.
yeah, it's almost the exact same thing, right? So, with that said, ladies and gentlemen, what we're going to do is we're going to go ahead and call it for today because the chances of us getting another trade before the hour is up is slim to none. Because usually there's about 30 minutes between each trade, 30 minutes to an hour and a half between each trade. So we're going to go ahead and call it for today. We appreciate you guys tuning in, and we will be here again tomorrow to do the exact same thing. That's where we would run. This is the next man up, ladies and gentlemen. I've taught many people how to trade. And like I say all the time, the 17-year-old man makes me so proud because he was young and kind of took in everything I said. And we're going to make this young man here a millionaire trader or $1 million over the next probably year and a half. But stay tuned, right? Tune in with us every day. We're here every day from about 9:30 to 10:30 every day. So appreciate you coming in. Please subscribe. Please tell others. Please like the videos. This video will be up on YouTube and by the end of the day. And you have a chance to kind of see what we did live. And with that said, we're out. Have a good one. Thank you for tuning in.